Community Health Watch. My name is David Hawley.
And my name is Juanita Allen Kingsley, and this show is sponsored by Century Health Systems, the parent company of the Natick Visiting Nurse Association and New Century Home Care Services.
Are you prepared? Now that you're ready to retire, do you have a plan for your health care or your retirement funds? Today on our show, we have Tobe Gerard, the owner of Tobe Gerard Insurance, LLC, who's going to help us out. Welcome, Tobe.
Thanks, David. Thanks, Juanita.
To start off with, could you tell us a little bit about your background?
Well, personally, I've lived in Natick for the last 30 years, raised my family here. Professionally, I've been in the insurance industry for 33 years and specializing in long-term care insurance for the last 12.
Okay. What are your professional qualifications?
Professional qualifications would be that I'm a CSA certified senior advisor, CLTC certified in long-term care. I also hold an MBA.
Okay. Can you give us a brief description of your business?
Sure. Tobe Gerard Insurance, LLC. We focus in on working with individuals who'd like to explore long-term care insurance as an option for themselves. So we deal with individuals, couples, businesses, and I also do training throughout the United States for colleagues, fellow insurance professionals who'd like to learn more about long-term care insurance.
When I mentioned the word long-term, well, actually, your insurance company, what's LLC stand for?
It's a limited liability corporation. It's just a form of business entity.
Oh, okay, I'm just wondering.
Yeah,
okay.
just to shift the liability.
Okay. Your business focus appears to be long-term care. Why is that?
Well, it was a personal decision when I went out on my own. You know, you can certainly be a generalist and sell all kinds of insurance, or you can be a specialist. Being a baby boomer myself, having dealt with aging parents, having had them need long-term care, and my dad is still receiving care, just very involved with the cost of that care as well as the burden that it just places on family members. So I'm hoping for, you know, my daughter and the next generation just to be able, through long-term care insurance, to make it a little bit easier on families.
Can you tell us what is long-term care?
Well, when I define long-term care, it's any kind of care that you need because you have impairments either physically or cognitively. So if I couldn't bathe myself, dress myself, if I wasn't able to get to and from the bathroom, if I had physical impairments, I would need long-term care. If I had Alzheimer's, dementia, I could need long-term care. But it's really an array of services, so it could be everything from skilled nursing right on down to doing chores.
And then what is long-term care insurance? The natural next question once we define that.
Sure. I mean, insurance really is just you pay the premium and you transfer the risk. So in this particular case, the person is paying the premium and the insurance company is taking on the risk of long-term care. So they're hoping that you won't need it and you'll just keep paying premiums, and the person feels that it's, you know, getting peace of mind as a result.
And if you have potential clients that say to you, well, is this insurance really necessary? What would your answer be to them?
Well, I think it's a question of necessary is different for each person. I think if people are very, very wealthy, multimillionaires, 15 million and up, they might be able to pay for their own care without needing to tap into a policy. If somebody has very limited income, they're on the other end and they might be relying upon the government for support. But I think for people who are in the middle, it's necessary that they at least look at it and then decide if it's something that they want to purchase.
Right. So what you're saying is that it's appropriate for almost everyone, but maybe folks on either end of the spectrum, it might be less appropriate for them.
Absolutely.
It sounds like that. And all the companies must be different, as it is with every product. How do you go about finding out what things you're even looking for?
Right. Well, I think first of all, you deal with an agent who knows enough about long-term care insurance. I think every person is unique, so what you're looking for would be a few things. I think you want to have a company that has had longevity, you know, or experience in the long-term care market. Not all of them have. You know, it's a relatively new industry. It's only been around about 40 years, so to have longevity might mean 20 to 30 years. So you want a company that's been around, that's paid some claims. You want a company that has good financial ratings. I mean, that's key. You don't want to find out that your company went insolvent. You want to have a company that's had relatively stable rates. You know, it's been a little rocky recently with some of our companies, but I always say if you look at a spreadsheet, 6 companies, 5 of them are within a few $100s and the other one's half,
Right.
there's probably something wrong with that company.
Okay. And there must be many different companies offering the product. What's my first step in figuring out what companies do I look at?
Well, I think, again, if you're dealing with an independent agent who sells long-term care insurance, and I differentiate that from a career agent is generally going to just sell one product that's offered by that company. But independent agents can represent as many as they'd like. So a lot of what it comes down to is talking with that agent, and then based upon your age, your health, your marital status, what you're looking for, the agent hopefully will come back with one recommendation. Sometimes it's more than one recommendation, but they should be able to do that hard work for you behind the scenes.
And you're an independent agent?
I am independent,
Okay,
yes.
good.
Yes.
Just to clarify that.
What about, when is a good time actually to buy long-term care insurance?
I know people are always looking for that magic age, and I know that there are advisors out there that'll say it's age 58 or 59. I really don't believe that. I think it is more where you are in your life. Dave, you and I were talking earlier, and you have a young child. If somebody said to you arbitrarily, at 58 years old, you're the age, but you had a 6-year-old, it might not be appropriate because you still have all those years ahead where you're going to need to be going through the cost of college and things like that. So I think it's where people are at in their life. I think if their children are done with school, that's usually the first time they start thinking about themselves again. And that could happen to someone in their 40s, it could happen to someone in their 60s.
It's a great point.
What if someone isn't in good health? How does that affect, the type of insurances that they're going to actually get?
Okay. Well, I think it's a question of good health, what we mean by that. I think we all like to think we're in good health, and sometimes we're in denial, but every insurance company has a different underwriting profile or a different underwriting philosophy of what they will take and what they won't take. Some are more liberal than others, some are more strict than others. I think the important thing is just to find out if you're insurable, and again, you would do that with the agent up front. They would probably ask you some medical questions, and then from that, they would go back with the companies they represent to try to figure out which is going to be the best fit. And that's changed over the years. I remember just five years ago, cancer was a big no-no, and they were very, very careful about what they would or wouldn't take. And now it's, there's been a lot more liberal underwriting when it comes to people who have survived certain kinds of cancer.
So it's a dynamic process of what folks are accepting and what they aren't. in terms of the
Absolutely, and
companies.
there are some companies out there that will have an appetite for certain health conditions where another company won't. They might have an appetite for certain age groups and not others. So I think it's the job of the agent to really know what's the company looking for and giving them those kind of clients.
I think sometimes folks, too, have trouble discerning the difference between health insurance and long-term care insurance. So folks will say, well, I've got health insurance. I don't need that long-term care
Right.
insurance.
Right.
How would you define where one ends and the other begins, and how do they work together?
Okay, that's actually a really good question because we do hear that a lot. People will either say, I have health insurance or I'm on Medicare. The bottom line is none of the other insurances, the health insurances, are meant to cover long-term care. The most that they're going to cover is going to be up to 100 days, and in most cases you're going to be looking at more the need for skilled care, more nursing home kind of care. They really don't work that well together. I usually look at it that long-term care takes over when everything else leaves off.
Okay.
Again, it's long-term. So if it's short-term care, it's going to get resolved in a hospital setting or a rehab setting. But when you get into something that doesn't get resolved in hospital or rehab, you're probably going to be looking at something that's more chronic.
Now, most companies have some ways that they restrict usage. I mean, everyone's trying to make sure that that the use of services is within certain parameters. How does that work?
How does that work? Well, every kind of insurance has, what we'd call a trigger, to pay a claim. Obviously, if you had a toilet overflow on your homeowner's claim, that's going to be the trigger. If there was a collision, that's going to be the trigger on the auto. With this, they've actually standardized what we call the triggers, and they've been standardized for a while now, so that all long-term care companies that are writing what we call tax-qualified long-term care insurance, it's the same thing. And what it basically is that either the person can't do 2 out of the 6 activities of daily living, and I can share those with you, and that it's expected they won't be able to do those 2 out of 6 for at least 90 days. That's key wording.
Okay.
Or that they have a severe cognitive impairment, which we generally know as would be Alzheimer's or dementia, or, or something similar.
Okay. So it would be after your health insurance has stopped paying, you continue to have the needs, but you'll need those needs beyond 90 days. So they're
That's
ongoing custodial needs.
That's correct. I mean, the reason for the 90-day certification, if the licensed medical practitioner in your life can't say it's going to last at least 90 days, it's
Right.
probably not going to be a long-term care claim. It's probably going to be resolved more under medical or Medicare or something like that.
What about the fear that a plan could change what it covers after you buy it?
Well, the plans actually don't change after you buy them. The pricing could, and we can certainly
Okay.
talk about that. But the plans themselves, whatever the paper it is written
Okay.
on, that is what it's going to be. And that goes with you wherever you go. So if you buy a plan in Massachusetts and you decide to retire to Florida or New Mexico, that policy or that plan goes with you there.
Oh, good.
If you decide to live out of country, that plan would go with you there. So
Okay.
again, the agent really needs to just make sure that whatever they're selling is going to meet the needs going forward of their clients. And I know specifically when you're talking about international coverage, not all companies do a strong benefit in that area. So when I have international clients, I really make sure that we're giving them the right fit.
Okay. You talked about two things. You talked about those activities of daily living.
yes.
And then you talked about pricing changing. Can
Sure.
you just-
Let's go back to
Yeah.
them. Okay. The activities of daily living, again, are, they're standardized at this point. I try to remember them in alphabetical order because it's easier. But there's bathing, there's continence, there's dressing, there's eating, there's toileting, and transferring. And the two that we tend to see the loss of first are bathing and dressing. Those usually go hand in hand. It's any two. It doesn't really matter. But the interesting thing is, and I saw this personally in my own life with my mom, is it may start off with just two, but by the time you're really dealing with an extended long-term care claim, usually all of them go.
Okay.
Yeah. Now we're talking about
Yep.
rates going up. Okay. I think this is one of the biggest boondoggles we've had in the long-term care industry. There are many long-term care people who don't notify their clients that this coverage could go up. I think the confusion is the coverage is guaranteed renewable. And what that means is, regardless of changes in health, as long as you pay your premium, it's going to be renewed. But it doesn't say that the price is guaranteed. And long-term care insurance is different than regular health insurance. I'm sure every year, if you have health insurance through your employer, it either goes up or it stays the same, but they take away some of your benefits.
Sure.
And they do that with an annual rate filing. Long-term care insurance doesn't have an annual rate filing. It could go for years and they won't have a rate increase. But then they can go back and file with the insurance department in whatever state and say that they need an increase in rates. And they have to justify that actuarially, why they need that rate increase. And then the insurance commissioner has the choice of either saying you can have that rate increase, or you cannot have any rate increase, or we'll give you something in the middle. So it's really important that the consumer knows up front that these rates could go up.